Get Rich Education is brought to you by Norada Real Estate Investments and Mid-South Homebuyers.
Welcome to Get Rich Education with Keith Weinhold, giving you information and ideas on the investment that has turned more ordinary people into millionaires and billionaires than anything else, and can provide you with more wealth and happiness than you ever thought possible. Now, here's your host, investor, entrepreneur, business owner, and educator, Keith Weinhold.
Welcome to Get Rich Education. This is episode 58, and I'm your host, Keith Weinhold, back to help you build your wealth with information that's educational, actionable, and inspirational. We're going to discuss seller financing with David Campbell today. This is the third of 3 consecutive shows that discusses financing. The first 2 were about conventional real estate financing, and today's is more creative. I'm coming to you today from Central America. In fact, my wife and I are here in Nicaragua. I recently took an investor tour of a cash-flowing coconut plantation here in Nicaragua. I expect to be making another tour of a tropical hardwood timber plantation soon here as well. It's really fascinating to see this stuff. And these are the types of opportunities here, though, these 2 particular ones I'm telling you about, that just aren't quite as approachable as the coffee investment that I've featured in Panama and will feature again. Because as far as you need to be an accredited investor for these 2 here, and the minimum amount to get in is greater as well. But, there is some opportunity here, and I might bring you that on a future show. But the next thing I plan to do here in Nicaragua is go surfing. Yeah. First of all, just dropping back here, I guess not everyone owns a almost worthless geography degree like me. Okay, so Nicaragua is the largest country in Central America. It is between Honduras to the north and Costa Rica to the south. And I am in, the southwestern portion of Nicaragua right now. That's the Pacific Ocean side, the west side, and I am near San Juan Del Sur, Nicaragua. And I've got to admit still, I am a little intimidated about surfing because I've only ever gone twice in my life, both times in Hawaii. Once was where I had a formal lesson, and then the other time was just out by myself. But I do have a great guide here to help show me around and kind of demystify it for me. I fall off my surfboard a lot, but to me, I enjoy surfing even when I'm falling. It's just unfortunate that most of my falls seem to be of a really clumsy type, always right on top of some sharp coral, and they always seem to be in front of some impressionable girls. So, hey, if surfing is fun and I really seem to get the hang of it, I might just stay here another week or longer before going back to the U.S. When you've made money follow you, you've made enough of a sustainable stream of income follow you in the form of cash flow payments that your property manager just places in your account monthly. You are free and you can live how you want to live. You've got freedom of time, freedom of geography, and even peace of mind. So I'll leave Nicaragua when I'm done having fun. But hey, let's chat with our great guest today, hassle-free cash flow investing's David Campbell. As a real estate developer, investor, syndicator, and broker, David Campbell has been principal or a key advisor to over $800 million of real estate transactions, including apartments, office, retail, hospitality, condo conversion, winery, and production home building. As a real estate syndicator, David Campbell has raised and or managed over $30 million of private equity invested into real estate development projects. He's been a sought-after speaker at major real estate and investing seminars. I'm grateful to have David back. Here he is as the first full-feature repeat guest on Get Rich Education, Hassle-Free Cash Flow Investing's David Campbell.
Woohoo! Keith, I am pumped to be here, and what a huge honor to be your first repeat guest.
Yes, there will be a trophy coming in the mail for that.
I'll put it proudly on my mantle. The Get Rich Education podcast is so valuable for your listeners, and just congratulations to anyone who's tuning in today and to your repeat listeners. They are in for a treat.
Well, thanks. The first time you were with us, we discussed mortgage note investing and how one can get a good, stable return that way. But you have significant experience with seller financing on both the seller side and the buyer side. So if I have a listener that's a buyer and they don't quite think that they have enough cash to get into something, or they don't have quite the right credit to get into something, or they want to buy a piece of property that isn't quite financeable for the bank, what is seller financing, first of all, David?
Seller financing is just when you go to the person who is selling the property and you ask them for a loan rather than going to a third party. And you can kind of extrapolate that a little bit farther and say that private financing is the powerful tool, and that the seller is one of those people that can provide that private financing to you. In fact, the seller probably has the biggest motivation and possibly the most aggressive financing terms out there, because their motivation is to sell the property. And their motivation isn't necessarily to get the highest interest rate. It's not necessarily to get the most secure loan. Their motivation is how do they convert their current property ownership into someone else's hands and let them go from active ownership to passive ownership.
Okay, so when we're talking about seller financing, we're talking about a real estate purchase that does not involve a bank loan. But yet, a lot of times when people first hear seller financing, that confuses them. But I think if one thinks about it this way, typically when you buy something from somebody, you pay the person that sold it to you. If you buy a 5-pound bag of oranges, you pay the person that sold it to you. There is not a bank involved in it, but yet somehow when it comes to real estate, that confuses people, when the buyer just makes payments to the seller directly, just like they would when they buy a 5-pound bag of oranges. So sometimes people ask, David, seller financing, first of all, is that even legal? Is it something new? Or, what came first, seller financing or bank financing? What do you have to say to that?
Yeah, I can imagine thousands of years ago, there was someone that wanted to sell their farm or their house, and the person who was going to buy it didn't have a lump sum of money to pay them. And I just imagine they said, well, I can't pay you all the money up front, but every month that I get paid, how about I give you a portion of my earnings? And the seller says, great, I'll take a percentage of your earnings rather than a lump sum. And so I think seller financing came before bank financing. And then people realized that there was a profitable opportunity to lend, and that the banking industry came second. On terms of is it legal? And the answer is generally yes, but there are some times in some states where you may want to get an attorney or a licensed real estate broker involved in the creation of the loan documents and the structure of the seller financing to make sure that you're compliant with the laws regarding financing in general. And each state is slightly different in how stringent they are in supervising seller financing.
Okay, so we might have a third party involved to some extent with formalizing the documents and such. So what are some of the motivations that you've seen? Why would a person want to buy a property with seller financing rather than using a bank?
Yeah, so as a potential buyer of a property, financing is what makes the whole industry happen. And so when you're coming to a seller of a property, and most sellers are going to want a giant wheelbarrow full of cash. Let's be real. The seller probably isn't most motivated in a seller financing offer, but it's important to, as a buyer, to put that in your tool chest if you're looking for, number one, potentially higher loan to values than what your bank can provide. Number two, potentially lower interest rates than what the bank can provide. And three, you as the borrower might not qualify in the eyes of a bank, but in the eyes of a seller, if you can show them that you are, creditworthy in a non-conventional standpoint, then you might be able to get that deal put together. Oftentimes, as a seller, the motivation to accept seller financing, it could be that it's a down market and there aren't people with wheelbarrows of cash showing up at their door. And so by offering seller financing, you get a wider pool of buyers. For example, I own a home building company, and our home building company always advertises every single home that it can be purchased with cash, of course, and we always market seller financing. Because I know if I sell a home on seller financing, I can always resell that seller financing paper to get cash. So for me as a seller, it's net cash all the way. But by offering that seller financing, I've quadrupled or quintupled the number of buyers that might be interested in my property.
Right. So a seller might have an incentive to do that because you've got a larger pool of buyers. With a larger pool of buyers, you might be able to get a better sale price. So on the buyer side, too, why don't we just give an example, David? Let me ask you this. Let's say a buyer wants to buy a sixplex building for $600,000, but they don't have the 20 to 25% down that it typically takes for a multifamily loan. What kind of structure, just for example, a buyer find advantageous if they were to make a certain seller financed offer to a seller? What would that look like?
That is such a great question. And I love creative deal structures and I love creative financing. And every time I get a question like that, I can think of probably 10 or 20 different answers to that same situation. One way that I like to approach deals is I want to be into the property with as little money down as possible.
Agreed.
And so if I can buy that property, let's say that $600,000 multifamily is 7 cap rate, and I could borrow that money at 5% interest rate. I'm making a spread. I'm making a 2% spread between the cap rate and the interest rate. I want to borrow as much money as I can, potentially all of it. If I can get all of it, that's the best. So with a seller, I could go to them and try to understand their motivation. Many people who are selling a multifamily property, they still like the yield. They still want income, but they might want to be out of the hassle of property ownership. And so if I can understand that is the seller's motivation, I might present to them an offer where, Mr. Seller, I would like to buy your property for maybe $610,000. I'll pay them a little bit more than their ask price. And as my down payment, I'd like to give you cross-collateralization on this other asset that I own. Maybe I have a free and clear building, or maybe I've got another mortgage note, a first position mortgage note that I own that's producing income for me. Maybe I could give them that mortgage as collateral, and then I can buy that property with 100% financing. And that's a situation where the seller has satisfied their need, that they've got some skin in the game from the borrower. It satisfied their need that they're out of active management, and it satisfies their need that they're getting income from the property. Because if they own an income property, they probably want income. Most people, when they're selling a property, I'll ask them, what's your motivation for selling? When you get your money from the sale, what are you going to do with it? Sometimes the answer is, well, I'm going to take the proceeds from the sale and I'm going to go invest it for income. Well, awesome. That's perfect. Let's figure out a way where you don't have to do the step to cash and then pay the tax and then go into income. Maybe if they sell or finance for their property to me, they might qualify for installment sale treatment, which is a portion of the tax code, which allows that seller to defer some of their capital gains into the future as they receive those payments from me as a buyer.
Boy, that's fantastic. You just brought up so much there. Now, if a buyer is successful, they can get in with a lower down payment when they buy a property than they would have to with bank financing. You brought up something that even goes beyond that, cross-collateralization, where maybe an investor puts zero down and they go ahead and secure their skin in the game with other property that buyer already has in their portfolio. So now you've got effectively zero or close to zero down by that buyer, and your cash-on-cash return goes through the roof. It would be infinite as long as that property cash flows, for one thing. And you also started to bring up some motivations. I've found a lot of times as a buyer, I've needed to educate a seller somewhat, educate that seller on why they might want to consider seller financing. Can you tell us a little bit more about that, when the buyer needs to educate a seller on why they might want to offer seller financing to me if I'm on the buyer side?
Yeah, I look at every transaction as the seller needing some counseling to figure out what their motivation is and why they want to sell. And I always like to talk in terms of benefits. So, Mr. Seller, you've got the benefit of this property and you want to get rid of that benefit. So tell me what benefit that you would like to have that's greater than the property that you currently own. And then just shut up and listen. Let that seller talk about the benefits that they're seeking. And then you try to find a way to put a set of benefits together for that buyer. Maybe they're looking for greater security than that property could provide. In that particular case, maybe I can make sure that the LTV, their combined loan to value, is lower than what they currently are. I'll increase their security in the property by making my down payment either in cash, which is not my preference, but in terms of cross-collateralization is bigger. So you've got to educate those particular sellers that they even have a motivation for selling and to quantify, because most sellers candidly don't even really know why they're selling the property. They just know why that they don't want to own this property, but they don't want to know what they do want from the sale.
Successful negotiation is finding out what the other party wants. And you really brought up a key question a few minutes ago. If you, as a buyer, are interested in a seller finance deal, if you can ask that seller, what are you going to do with the money? What are you going to do with the proceeds of this sale to me? Boy, you can find out a lot. If you learn that that seller just plans to park the money in a 1.5% CD, and the example we're giving, you just offered to pay them a stream of income of 5% after you make a small down payment on a property, they get a stream of income at a better interest rate than they could have most other places. And they also get some tax advantages that you already touched on. So this is part of the buyer educating the seller.
Yeah, and there's so many properties for sale. There's an infinite number of properties virtually in the universe that you could buy. If I talk to a seller or a seller's broker and I ask the question, what's the seller's motivation for selling? And if the response is, it's none of your business, then that's a big clue to me how the rest of that transaction is going to go.
Right.
And so maybe that's my first clue to just say, next, instead of your property, let me go find the property next door that's virtually identical to yours and go work a transaction there.
Now, maybe there's a relatively non-financial component to the seller financing. If the seller is trying to get rid of a property, but yet there's some sort of a conformity issue or some sort of repair that is difficult for them to fix in order to make the property financeable to a bank, you as a buyer, you could go ahead and educate that seller that, hey, if we do a seller financing deal between us, you don't need to fix this thing.
That's correct. As you know, banks send their appraisers out and they have very strict requirements for property condition. And sometimes people think the answer is hard money loans, private financing, and there's a great place for that in the marketplace. But a hard money lender is going to charge you points up front. They're going to charge you a high interest rate. Whereas the seller, maybe their motivation is, let's do a short-term loan. Let's do a very inexpensive loan for you to take possession of the property, go do the repairs yourself, and then refinance the property after the property qualifies. I've also looked at several portfolio deals. Maybe I want to go buy a portfolio of single-family homes. And it's very difficult, not impossible, but it's difficult to get acquisition financing to go buy a large portfolio of single-family homes. And if my motivation is to buy that portfolio, break it into pieces, and then go flip that property, I don't need a whole, long-term loan. And that is oftentimes the seller's first pushback. Well, I don't want to do a 30-year mortgage with you, Mr. Buyer. That's too long of a time for us to be in partnership together. But if I can ask the seller, hey, would you give me a 12-month loan with a balloon payment? And in that 12 months, here's the business plan that I'm going to execute. I'm going to do repairs. I'm going to do rehab. I'm going to flip the property. I'm going to refinance the property. Whatever it is your business plan is, I believe in abundance. And if I share that business plan with the seller, some people think that you're going to lose out on the deal and the seller's going to take your ideas and run with them and you'll lose the opportunity. I find more times than not that the seller doesn't want to execute that business plan because they were probably already aware that was a possibility and they didn't want to deal with the hassle. They just want to sell, get their benefits they're looking for, which is usually passivity, and move on.
Now, if you're listening closely, you probably, as the listener, have your wheels spinning quite a bit with possibilities and such. Now, when David and I come back, we need to talk about what some of the drawbacks are, what some of the problems are with seller financing. You're listening to Get Rich Education. My guest is Hassle-Free Cashflow Investing's David Campbell. More when we come back. I'm your host, Keith Weinhold. Cash flow real estate investors nationwide and worldwide, this is Get Rich Education's Keith Weinhold. Forbes has rated Memphis, Tennessee as the #1 cash flowing market in the world. Our good friends at Mid-South Homebuyers have been Memphis's premier turnkey real estate provider for 14 years with a stellar reputation and an A+ rating with the Better Business Bureau. Owner Terry Kerr was born and raised in Memphis. Yeah, he knows the market. and has renovated and sold over 1,000 houses in the Memphis area. Find out what their many repeat buyers already know. Their houses are completely renovated, even come with a 1-year builder's warranty and a lifelong rental guarantee. They're a perfect fit for the first-time out-of-state investor or the seasoned investor diversifying their portfolio. Mid-South Homebuyers friendly staff makes investing easy. Learn more at midsouthhomebuyers.com or give them a call at 901-217-HOME.
Are you having a hard time finding great investment properties? Unfortunately, the best deals are rarely found locally. Successful investing begins with the right properties in the right markets. Norada Real Estate provides everything you need to invest in the best deals across the U.S. Our simple, proven system will help you create real wealth and passive monthly cash flow. Get your free copy of the ultimate guide to passive real estate investing at noradarealestate.com/guide. That's NORADA realestate.com/guide.
This is Rich Dad Advisor Garrett Sutton. To grow your wealth, listen to the always valuable Get Rich Education.
Welcome back to Get Rich Education with HassleFreeCashFlowInvesting.com's David Campbell. David, there's a few other names around seller financing, and sometimes those terms confuse people. Can you talk about some of the other terms synonymous with seller financing?
Sure. Some people call it seller carry or carryback financing, or they'll call it a wrap note, where they'll leave their existing financing in place and let the buyer wrap their existing mortgage. Some people call it subject to financing. So there's a lot of different vocabulary that basically mean you don't have to go to a bank and the seller is not going to get all cash. That's fundamentally, you're looking at the equity of the seller to bridge the gap between what you can pay as a down payment and what the seller gets. They're going to get their payment over time.
Now, there can be some problems around seller financing. It's not like every deal is straight ahead and straightforward. I mean, far from it. So, there's something in there called the due on sale clause, David. So you want to tell our listeners a little bit about what the due on sale clause is, and if you only want to use seller financing when that seller owns the home free and clear or not?
Sure. So if the seller does own the home free and clear, seller financing is pretty easy because there's no bank to pay off. If the seller has a very small loan, it's possible that your down payment pays off the seller's loan, right, and then they are only lending you their equity. In some situations, the seller might owe a lot of money on their property, and they're going to give you that rejection that they can't give you seller financing because they have to pay off their underlying lender. And in some states, it's actually in many states, it's logistically possible to buy the property and not pay off that underlying loan. Of course, if that underlying lender finds out that the property was sold without paying it off, it's not illegal, but it does violate the deed of trust requirements in most loans with what's called a due on sale clause. And so that lender, the first lender who was on there, the seller's lender, they have the right, but not necessarily the obligation. They don't have to do it, and many times they don't, but they could call that note due, and then that they'll foreclose upon the seller's loan. And that's a huge risk for both the seller of the property because they're going to be losing their note. And it's a huge risk for the buyer of the property because if that seller's note goes into foreclosure, really the only way to cure that note is to deed the property back to the seller, which you probably don't want to do, or to pay off that seller's loan. And that, could leave you in an awkward position to come up with a bunch of money really quickly.
So anything else if a seller has an objection, and, oftentimes a seller will say no to seller financing, any sort of other things that a buyer might want to use as motivation or education to kind of negotiate with that seller to get them to agree to a seller finance deal?
In fact, to help set expectations for the listeners, in a seller's market, it's very unlikely that a seller is going to entertain a seller financing offer. Really, this technique is most powerful in a small market where there's not a lot of buyers, or in an unusual product type where there are a few buyers, or in a buyer's market where there are lots of properties for sale and not very many buyers showing up. So to educate a seller to accept your offer in any market, we talked earlier in the first segment about benefits and helping the seller understand the benefits of seller financing. One of the potential benefits for a seller is you might be willing to pay a higher sales price for a property than someone who didn't get seller financing. Sometimes I've actually paid more for a property than what it's worth because it gave me seller financing. And a good example is maybe there was a property that was valued at $90,000 and the seller owed $100,000 on the property. The seller is in a potential short sale position on that deal. They'd have to write a check to close the transaction. I could go to that same seller and say, Mr. Seller, I'll pay you $100,000 for that property. And here's the terms, no money down. And the interest rate will be basically, let me take over your existing financing. And so that particular seller, their motivation might be they get to move out. They get to stop making the payment. And for you as a buyer, maybe your motivation is to turn that property into a rental. And then you get the income from the rent, you pay that mortgage, and hopefully there's something left over. And you got that property with no money down.
And as a buyer, you just solved the problem for that seller.
That's correct. If you could buy, Keith, how many positive cash flow, no money down properties do you want to buy, even if you have to overpay for them?
I would still buy quite a few.
Yeah, because when you're positive cash flow, you're looking at the benefit of cash flow. You don't really care as much about the equity in that situation. Whereas the seller and most people in the marketplace, all they're looking at is the equity.
Right. That's such a great point. Something I've brought up so many times. We don't want to be underwater on something, but if it cash flows positively, I mean, gosh, it's just not a big deal.
That's right. The value matters when you sell or when you refinance. And when you go to sell and you don't have equity, you might consider seller financing as an option, especially for people who were able to get low interest rate loans. I've seen a lot of transactions where maybe the property is valued at $100,000 and the loan is exactly $100,000. They've got zero equity, but maybe they were able to borrow the money when interest rates were extraordinarily low, maybe 3.5%, 4% interest rate. And then they go resell that same property for $100,000 and $100,000 financing. And they write that loan at 5% or 6%. So now that seller is able to sell that home and get cash flow. So there's no equity to be gotten at the closing because the seller doesn't have any equity. But if they can capture that arbitrage spread, meaning they borrowed money at 4 and then they resold the property and got no money at closing, but they at least made a spread between the buy and the sell, then that could be a win for that particular seller. Now, obviously, the risk is what happens if the buyer buys and then they don't make the payment? So as a seller, you want to make sure that you've got significant amount of equity or a solution to that situation. And that solution's got to be better than where you currently are.
What are some strategies? How does a buyer go about finding a seller finance deal?
So the best way I find is relationships, and to use your relationships and let your needs be known to the people who work in that particular space. I mean, most deals are not really marketed seller financing, even though my advice to my investor clients is market everything with seller financing because it's going to make the number of calls coming in significantly greater. And so if you're a buyer looking for a seller finance deal, you can use keyword searches in some of the Realtor, the MLS, or if you're on LoopNet or Craigslist, use those keywords, seller financing, and see what comes back.
Yeah, some other search items one might use are owner will carry or OWC. Those are some search things that you might want to put in there if you're looking for a seller finance deal on any of those sources there. So, I mean, how does one go about drawing up the documents for doing a seller finance deal, and who pays for drawing up the documents, David?
So it's a negotiable item on who pays for it. Typically, the borrower is going to pay for the borrower's loan documents. And so when I'm writing an offer to buy something with seller financing, I usually start out with a letter of intent that is very simple and easy, and at least opens the conversation with the seller without getting too much in minutia. Because I found if I present, a 30-page purchase contract to a seller that contains all kinds of complicated seller financing clauses in it, the answer is usually no. A confused mind is going to say no. If I can give them a 1-page or maybe even a half a page letter of intent, and they can get their mind around, okay, this is something I'd entertain, then you can, open up that dialogue. Then when you get to closing, you'll probably want to close at a title company so that you get title commitment or a title insurance policy in place. And in that closing at a title company, you can ask the title company for their attorney recommendation to help you put your seller financing documents together, which are traditionally going to be a note, which is the promise to pay, along with the security instrument, which is going to be a deed of trust or a mortgage note, depending on the state that you're in. And if you are leaving the underlying financing in place, then you may have a wraparound loan agreement that is in addition to or a supplement to that deed of trust.
Right. I'm really glad you bring up the letter of intent. That way people are not intimidated. That way people know what's coming. It's a nice summary. And, a letter of intent is even a smart thing to do if you want to make a conventionally financed offer on a property. Just let the owner know what you plan to do before you actually make the formal offer and help demystify it for them. And they really appreciate that sort of thing. So, are there any more risks with seller financing, David, between the buyer and seller that can make a deal go south and sour?
Sure. And so we could do, a whole day seminar on the risks of seller financing. The fundamental question that I want to ask as the seller is, am I happy if I get paid, and am I happy if I don't get repaid? And so if the seller can answer those two questions, then they're doing their due diligence well. As a buyer, I want to know, if it's a free and clear property, then the risks are significantly lower because you know that the seller's loan is there. And there's also some compliance issues. Typically, if it's investor to investor or business to business transaction, the compliance issues are a lot lower. As soon as you start selling properties with seller financing to the consumer market, so it's business to consumer or even consumer to consumer type of lending, the regulations become significantly higher. And that's where I would definitely encourage everyone to get competent legal advice, and your title company might be able to assist you with that.
Great tip. Well, as we're winding down here, David, any other thoughts about seller financing? We've talked mostly from the buyer side. Maybe you have another thought from the seller side as well?
I really like offering all of my properties with seller financing. Even if I don't want that income stream long term, someone will. And so it's very possible if you go to sell a property and you market it for seller financing, you might get a premium sales price. You might sell your property faster. You might sell it without a broker. You might get more offers, which allows you to negotiate, between different buyers. So market your properties with seller financing. Once you get that seller financing offer and you close and you create that seller financing paper, you can resell that note. Whether you are selling that note with equity in it, or if you sold it on a wrap situation where you left your existing loan in place and you sold it and you wrapped that loan, you can, as the seller of the property, sell that note and get the cash, the equity that you were trying to get through an all-cash sale.
Hey, well, that's been great. And the best way to look up David and learn about more of his resources, where you can learn about videos and webinars and tutorials and such, is at his website at hasslefreecashflowinvesting.com. And I'm truly putting that out there as a good resource for you, the listener. I feel like I need to bring this up every once in a while. No guest has ever paid me to come onto the show, and I likewise have never paid a guest to come onto the show. So I just feel like I need to say that once in a while to be transparent. And there's also nothing going on like if David gets business from me for appearing on Get Rich Education, I get compensation. There's nothing like that going on. So Hassle-Free Cash Flow Investing is a terrific resource. That's in the show notes for you. David Campbell, thank you so much for coming back to provide value for our listeners again.
Keith, you do such a great job of drawing out great education for your listeners.
Well, I hope that you liked that today. Seller financing can be another tool for you. Know the benefits, know the limitations, And, if you're more of a turnkey real estate investing buyer that just doesn't want to devote as much time to real estate investing, then perhaps this is of less intrigue to you, although it's good that you know it's there. If you want to keep this episode in your back pocket so that you can get scrappy and afford something that you couldn't afford otherwise, especially if and when we hit a down market, then this is one potential way for you to thrive there. So understand that a seller finance deal also will not show up on your credit report, okay? And that could be of an advantage to a person, but I really don't want you to think that way. And when you apply for a conventional loan, it is your responsibility to be forthcoming and disclose that you have this loan. I have heard of some people that have not reported it, but if you're listening to GRE, we're only going to discuss the proper, legal, ethical way to conduct your business. And today was by no means a complete, comprehensive guide to seller financing, but now you know what it is and about some of its dynamics. And hey, it was great to have David Campbell come back as the first ever full feature guest on GRE. And if you think the real estate market's headed for a crash, listen to episode 51 with David Campbell and I just 7 weeks ago to learn how you can be the bank and get a 10% or so return with mortgage note investing. You can also check out David and all of his great free resources at hasslefreecashflowinvesting.com. Of course, a resource like that is in our show notes today. And David has been a great second opinion for me, or even a good source of new information for my own investing over the years. You can also sign up for GRE's free wealth building newsletter at getricheducation.com, also in the show notes. Special thanks today to David Campbell. I'm going to wind down here and go see how the surfing is on Nicaragua's Pacific coast. I guess that I kind of hope to go out and live my daydream today. So I'm your host, Keith Weinhold. Until next week, think big, think abundantly, and don't quit your daydream.
You've been listening to Get Rich Education, telling you what the wealthy won't tell you about real estate and investing. If you enjoyed the show, please take a minute to visit iTunes and leave your comments.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Get Rich Education, LLC exclusively.